Hi everyone, we're here to talk about venture capital in Brazil and to give you some updates on how venture capital is going on. And we called 2023 updates. I know it's a bit soon, but updates on that. My name is Pedro
And I am Guilherme Potenza.
We're partners at Bronstein, Zilberberg, Chueiri Potenza here in Brazil. We're going to talk about three main topics. The first one is venture capital involving Brazilian companies, funds, and corporations. But typically, when a structure where the operational company is in Brazil, how would you invest in that company? Then we're going to talk about the flip, which basically means the corporate control of the Brazilian entity being transferred to another jurisdiction abroad. And the typical structure in Brazil and Latin America, for that matter, is Cayman Islands, the US, Delaware, and then Brazil. This is why you see those three flags here, but we're going to talk about that in more detail in a bit. And then the last topic, we're going to cover the current state of VC and what we have been seeing for this past, I would say, 3 months, 6 months, a year. And we're going to talk about some hot topics, including Silicon Valley Bank, unicorns, down rounds, and etc. So just to talking about the types of investments, which is what you see here in your screen. When you invest in Brazil, and especially if we're talking about early stage companies, we are used to seeing investors investing in those companies more so via convertible instruments, and that means debt, of course, than equity. And the reasons for that are obvious: less risk, succession risks, and we're going to see that again in the next slide. But if you look at the right side of your screen, the convertible instruments in Brazil are typically twofold. They are either a convertible loan, right, or a convertible bond. And the convertible loan is the type of instrument that we're more used to seeing these days, right, Guy? I think the bonds.
I would say that the bonds were initially used by funds or companies when they were testing the waters, let's say 10 years ago. But nowadays, we are at a different time in our ecosystem. So I would say that convertible loan tends to by far be the most used instrument here nowadays.
That's right. And then if you are an early stage company, and this happens sometimes, even when you have an operational company in Brazil, depending on the investor will require that you flip your structure and you incorporate Cayman from the outset. And when that happens, not only you can use a convertible note, which is similar to a convertible note, a loan in Brazil, but you can also use a safe instrument, which is an instrument that is very common in the US, but it doesn't exist yet in Brazil. Then that's the on the right side of your screen, talking about that.
And Pedro, just a quick comment there. It's worth mentioning that we see, for the past vintages when Y Combinator came out with the post-money safe, that the safe tends to be much more used rather than the convertible note for both advantages, both to investor and the company and the founders. Okay, so worth mentioning that as well.
That's correct. And then on the equity side, for whenever there's an equity investment in Brazil, the structure that is typically used from a documentation perspective is we have an investment agreement or an SPA or a subscription agreement, and then a shareholders agreement. It's just one agreement that covers all of the rights and obligations of the shareholders. If on the other hand, you already have a flipped structure, then we are very used to seeing, and I would say that this is the vast majority of the cases in VC in Brazil, the documents, they track the NVCA model. So you will have the SPA and those three agreements, the IRA, the VA, and the ROFR. Brazilian entrepreneurs and also funds are not only very used to that, but they require that the companies use that model or those models precisely because they want to cut costs. They want to make sure that the investors of future rounds know exactly where they're getting into. They understand the rights and they understand how to enforce them. So this is sort of the rule that we are used to applying here in Brazil. So those are, in a very short summary, the types of investments used for VC-backed entities in Brazil.
And one thing there as well, Pedro, when we're talking about the equity deals and domestic structures versus the offshore structures, that there's no right way of doing that. It's basically where investors are located. So let's say you're being invested by a local corporation that is structured under the form of a FIP, a Brazilian fund. So for that, maybe the best alternative, the best structure would be to set it up in Brazil. So a domestic deal. Right. But if you're talking about raising money with a US fund, let's say, it's very likely that the fund will ask for the company to be flipped and the investment to be done at the NVCA standard.
Yeah. On that note, just a quick comment, which I think it's relevant. Whenever you are contemplating investing in Brazil, you should think about what the exit of that investment will be and where the exit will be. Because if the potential or the probable buyer of that company is a Brazilian entity, it's very likely that the Brazilian purchaser will require that the sale takes place at the level of the Brazilian entity, and that can trigger certain tax impacts that will require the unflip of the structure. So you should ask yourself, and if you're a founder or if you are the investor, all right, let's use the NVCA model, but let's think about what we're gonna do 2, 3, 4, 5 years ahead, and what the implications will be. So it's important to not only think about this one round, but you should look into the future as well.
Exit should always be one of the main drivers for setting up or thinking about any investment round or structure. And on that note, Pedro, let's switch gears and talk about the structure, right? So we're talking about potential exits and how that can be done. So that's why we have here, what they call the Cayman sandwich, right? So having a holding company at the Cayman level, a Brazilian Delaware limited liability company as an intermediate entity, and a Brazilian operational company. So basically, that's the structure that we see for a lot of companies in the Brazilian ecosystem. There are some reasons for that, but when clients come to our firm and say, look, we have a Brazilian limitada, the founders are here, we have a few angel investors holding convertible loans locally, we need to flip everyone into Cayman. That's when we get in and we help clients to have their equity at the Cayman level, and the angel investors eventually also having their safes or convertible notes at Cayman. Or if we're talking about already an equity round, convert also those investors into equity once we're done with the structure. So why do clients, both investors and companies and founders, look for that structure? One of the main reasons are risk, the Brazilian risk, so Risco Brasil, as we say here, and access to funds. So there can be some political or maybe legal instability in Brazil, especially when you're talking to foreign funds and investors. So let's say, is there any risks of potential labor liabilities affecting me, or any changes in laws and regulations or taxation that can affect me as a fund? And if a VC talks to a colleague of the private equity industry that has been here since the 90s, they can say, well, that we have suffered a few traumas. So and VCs, they tend to bear maybe more risk than private equity funds because they invest in more companies. They don't get corporate control of those companies, management control. So they tend to have more risk and exposure. And funds, VCs, they are willing maybe to lose all their invested money, but not more money than they invested. So as a consequence of that, when we talk about access to funds, foreign funds structured offshore, they prefer to invest at the Cayman level rather than at the Brazilian level because of governance as well. As Pedro was mentioning, when you invest at the Cayman level, you can have the golden standard of the industry of the NVCA forms, the National Venture Capital Association of the US, and have those under the Cayman law structure, which works pretty well. And that makes the funds, the investors comfortable with that. So board will be there. Stock option plan will be based in Cayman as well, but respecting Brazilian labor and tax laws since employers and employees are located in Brazil. So that tends to work pretty well. And then finally, when we talk about liquidity and tax matters, if you're willing to sell, let's say, to a foreign strategic, or if you're willing to go to New York Stock Exchange or NASDAQ for an IPO, being structured in Cayman will make your life much easier, right? And you can have some tax efficiencies if you are a foreign fund investing at the Cayman level and the exit happens at the Cayman level. So for all those reasons, this structure that we're seeing right here picked up in the past 5 to 10 years in Brazil, and is mostly used nowadays by those companies, especially when they reach Series A, B onwards, right? We tend to see that structure here in many of the cases that we work with.
And that's not to say that other jurisdictions cannot be thought, right, or used for the offshore holding. So we've seen some clients that decided to incorporate the top holding in Canada or in the Bahamas, even in the US, and other clients that decided to incorporate the holding company in Europe, mostly when they have European VC funds investing. So this is also something that needs to be looked into detail, but this is generally the structure that everyone feels comfortable with in Brazil. So let's move on to our last topic. This is a beautiful AI created image. This is basically...
This is awesome, right?
Yeah, right. I was surprised.
So the briefing was basically, what we're gonna discuss right now. So this is the briefing we gave to the AI platform to come up with that image, which was purchased. Okay, we purchased it.
Yeah, of course. Yeah, no, we paid for this. So current state of VC in Brazil. Number one, of course, the Silicon Valley Bank going down. It affected several of our clients and a lot of not only the startups themselves, but some funds. I wouldn't say all, but some funds and individuals who had invested their money after a successful sale in the bank. But I would say that the biggest challenge right now is for our clients to actually operate their bank accounts. And more so than that, because this is sort of getting resolved now, and maybe when this video is where you guys are seeing this video, this will have all changed dramatically, because it's going to be probably 15 days from now. But the main issue is still the startups opening new bank accounts in the US, because Silicon Valley Bank has always been a champion of the tech world. So they're used to the profile of the entities, the clients. And so it was always a little bit easier to open the bank account there. So we need to find alternatives. There are a couple of alternatives that some funds have been referring their invested companies to. But let's see how it goes.
There's no champion yet that is, the go-to bank for Latin American startups like SVB was, right?
That's right. So one other thing that is sort of looking backwards, but it shows or reflects what the current state of VC is right now, is that we still, on 2022, it was the second best year of the VC industry in Brazil. There was this a recent study or paper released by Lavka that basically compiled the number of VC transactions and the amounts that were invested in VC in Brazil, in Latin America as a whole, and the amount was approximately 7.8 billion versus almost 16 billion dollars in 2021. Of course, we know that 2021 was a crazy year. We had
very atypical, right?
Very atypical. We had, companies and clients that received 2, 3, 4 term sheets from various investors, and definitely there was a oversubscription. But now things were still, I would say, hot in the beginning of 2023, but it's now things deteriorated in 2022, sorry, and things slowly deteriorated in 2022. And now, what's happening now? Now in 2023, differently than in the US, founders are a bit reluctant in accepting the fact that there will be actual down rounds. What we've been seeing right now is what we call, a flat round with multiples down round. So it's basically the company or the startup grew, I would like to say exponentially, but it grew a lot. It grew a lot. It grew like 4 times, 5 times in terms of, let's say, revenues or whatever metric they used for the valuation. But because of, the economic...
and not only that, Pedro, but also, I mean, from that perspective in the VC, we're seeing things picking up on that sense, right? Not exactly down rounds, but up or flat rounds with a few tweaks, right? But in terms of M&A consolidating the market and acqui-hires, we are seeing a hot market for that.
A hot market.
Not the huge exits, but we're seeing some consolidation because some companies are running out of funds and then they're getting bought by their competitors, right? So large M&As still to be seen. And I would expect at least some late stage rounds to get more traction on the last quarter of this year, maybe only in 2024. But we tend to be optimistic because we have lots of corporates investing and those rounds are happening, right? Mm-hmm. And then Pedro, I want to talk about our next video because we're running out of time. So
on our next video we're going to talk about tech M&A versus, I would say, brick and mortar M&A. So the differences and what you should expect from an M&A in Brazil or an M&A that has a Brazilian entity as the target. And as Gui said, we will expect to have a lot of large M&As this year, but you could use the differences and whatever it is that we're going to talk about in the next video also for the smaller M&As and the acqui-hires. So
thank you so much for being with us. Thank you.
Thank you. Thank
we'll
you
see
so
you in
much.
The next video. Thank you.
Our contacts are in here if you guys want to reach out.
Thank you.
Thank you.